There are millions of people waiting for mortgage rates to go down before they're willing to buy a home, and millions more who feel stuck in their property because they don't want to give up the low rates they got in 2020 and 2021. Well, what if I told you that even today it's still possible to get a rate in the twos, threes, and fours on a home loan? Well, it is possible, but not because there's some lender out there magically offering rates below their competitors, but because of a process called assuming a home loan. When you buy a home and assume the mortgage, you don't, after your down payment, get a loan on that property that's enough to pay off the balance of the purchase price. Instead, you're going to look at that property that has a current mortgage and you're going to take over that loan from the seller. Let's say, for example, you buy a home for $330,000 from a seller who currently owes $150,000 on their mortgage at 3% interest and a monthly payment of $632. Now, typically, you might make a down payment of 10% and then get a home loan for the remaining $300,000. Let's assume this is a rate of 7% and it leads to a principal and interest payment of $2,195 per month. At closing, the title company would send $150,000 to the seller's mortgage to pay off the home loan, and the seller would get a check for the remaining $180,000 that represents their equity in the property. However, now let's show what it would look like to assume the mortgage. In this example, rather than paying off the $150,000 loan, the buyer assumes the mortgage at the original 3% interest. They would then get a second mortgage on the property at current rates, again 7% in our example, and this second mortgage not only pays for the balance of the property, it also allows the seller to walk away with their equity free and clear. So while this would give the new owner a blended rate between the two loans of 5%, their total payment would be $1,630, a monthly savings of almost $600. Now, to assume a home loan, it has to be a federally backed mortgage, and there's only certain types that qualify, like an FHA loan, a VA loan, or a USDA loan. And the process to assume loans can be pretty complex, but there are services popping up every day like Rome.com and Assumable.io that not only show homes with assumable mortgages, but also charge a fee to walk you through the process. And while it's pretty obvious to see why you might want to get a property and assume a lower mortgage rate, there's benefits to sellers in this example as well, because you now have a marketing advantage where you can put this out into your network of potential buyers and let them know that you have the opportunity to transfer a loan at the lower rate. But if you're interested in assuming a loan or transferring your current loan to a potential buyer, reach out to your realtor or loan servicer and ask them for more details about the process.